Sold at 560.
785 the first, 785 the second, be sure, 785 the third, the final time, sold. The third and final time at £910,000, sold. Welcome to the Allsop Prop Chat. This is the series of podcasts designed to cover the interesting aspects of property. We're going to be covering all sections, starting with the commercial auctions, and we'll go through residential, commercial and build-to-rent sections as we progress throughout the year. Welcome to this version of the Allsop Prop Chat. This is George Walker from Allsop Commercial Auction, bringing this to you together with my colleague Will Clough.
Hi, George.
And Ben Hodge.
Hi, George.
Right, we're going to look at some detail in the auction, which is the 6th of May. Quite a good auction. It's our third of the year, and the total realisation was £62 million. So quite a busy day. And where does that leave us, Ben, with the year to date?
Year to date, we've had February, March, and now May, so £153 million raised overall, and that's 230 lots sold so
Excellent.
far.
And so probably many people were looking at our biggest lot yesterday, which was the big shopping centre in Kidderminster. We actually had 3, having kicked off the sort of shopping centre market this year in February. So what was the outcome, Ben? All 3 sold, didn't they?
It's a very exciting market, George. We've had 5 so far this year, 3 yesterday, or yesterday's auction anyway. So we had Kidderminster, Huddersfield and Widnes. So, yeah.
And they're all away just over 7 million in total.
Yeah, and 15 million so far this year raised through shopping centres or in this sub-market in the auction.
Okay, so I worked on the Coventry sale back in February with you, which we were quite surprised by the depth of interest in that. When I looked at the Kidderminster list, I really couldn't see much commonality between the people looking at Kidderminster and Coventry. I mean, was there much crossover? How deep is that market? It's quite interesting.
It is interesting. It's an interesting point. Going back to Coventry in February, we had a couple of parties there. And actually, this evolved to the Dumfries sale in March, and then has snowballed even further for May. So for Kidderminster, for example, we had 9 parties all registered to bid on this asset in the auction.
All paid the 100,000.
And it bid a security of 100,000 in our client's account. So we had people with intent to buy, and we had 9 parties. And were they existing from the Coventry sale in February? No, they weren't. These are 9 new parties.
Okay, and the last 2 drove it up about £1 million over reserve, wasn't it?
Yeah, absolutely. So we sold it for 3.77 million. Bidding started at 2.95. And yeah, in the end, it was down to 2 parties battling it out.
And what do you think is the driving? I mean, we saw Stephen Ashworth of Hurstwood said he bought Dumfries really to diversify. I mean, are these shopping centre specialists? Are they... clearly they understand tenants. What's the tone, Ben? What are these guys and girls looking at?
Yeah, I think it's the majority of these people, they're chasing income, they're chasing yield. The returns as a headline are really quite attractive. Net operating income, if we base the yield off that, you're looking at a spread of 15 to 20%, depending on obviously location and footfall and also tenant profiles, but roughly 15 to 20% off the net operating income.
And low capital rates.
Yeah, and £20 to £30 per square foot capital rates. Kidderminster was sold slightly higher than that.
It was nearly 40, wasn't it?
It was 37, yeah.
With a big old car park on the side.
Which is key because that helps with the footfall. You'll park in the centre, you'll walk through the centre and take it from there.
Okay, so I mean, we've got non-specialists, but just really diversifying, having a go, chasing a bit of yield, which they're confident, you start at 20%, you're going to get quality yield. You may not get it all. But
absolutely, and we currently have eight people that missed out yesterday, walking around, looking for more of these assets. So hopefully we can sell more of them.
Good stuff. So, Will, what other bits and pieces? I think the Guildford turnover rent was quite interesting, actually. Bit of a landmark in us establishing what someone might pay for a turnover rent. Talk us through the Guildford lot.
Yeah, I think Guildford's always been a bit of a barometer for retail in the UK, and has always been talked about as a town with rental growth. Well, clearly there hasn't been any of that recently. This one was let to Jack Wills on the high street. And as you say, it's the first example of a pure turnover rent that we've sold through the auction room. It was a 2-year lease from last year with monthly rolling breaks.
On both sides?
Yeah, off the back of the CVA in 2019. The turnover was just a flat 5%. No base rate, no nothing, just a flat 5% on turnover. To give you a feel on it, £20,000 is roughly what they paid over the last 12 months. Do you want to have a guess what the lowest quarter rent payment was and when?
3 and 6, wasn't it, in June?
June 2020, £387 they paid in turnover. To put that into context, the previous rent was 226,000. So 56,000 a quarter versus £387 a quarter.
Blimey.
But
And that was a fun selling, actually, wasn't it?
it's such a cracking location. People still love the town. And with that flexibility on the lease, people are coming at it from all different angles. 9 people looking at this. So they've clearly got their head around it, not looking at it, registered to bid for it. 1.16 million, off a guide of around 800, £385 a foot. Is that the way people are pricing it, or are they doing it off?
And one of my valuation partners immediately said to me, so what yield is that? And the point is, there isn't, because it's up and down.
And it's just an area that people are going to get more knowledgeable about, more comfortable buying into.
Yeah.
And it's just making sure that valuers, lenders, solicitors can also get their head around this model.
And probably the valuers, actually, just to understand it. I mean, looking at some of the, we sold the vacant Santander in Guildford, I think, was £311 a foot. So, you know, the marker for us for difficult vacant kit is 30. You're doing 380 on a trading building, letting on a turnover rent. It's interesting, isn't it? There's lots of markers for us. Yield isn't one of them.
Or could you argue that it's not far off vacant with that monthly break?
Yeah, it probably
And
is.
just taking a different tack, are you expecting to see more of these turnover rent deals coming through the
I
room?
think it's inevitable that they are going to be more commonplace in the commercial property world, particularly retail. And so there will be a proliferation of them through the auction room.
Yeah. I guess as tenants understand more of what they want, they'll be taking advantage of and banging on the doors of landlords with these break options.
And it will all be all about what percentage of turnover do you want?
Yeah. Quite difficult to value probably, but we've started, which is good.
What were you working on, George?
Well, I had a few things to look at. I mean, I stuck my neck out a little bit with a building in Epsom by saying on social media that this is going to test my theories of, you know, the revival of the suburban or market town and people's desire for these added value buildings. So we had a new lease to a butcher's, which is very fancy with no covenant, and a Superdrug next door with offices upstairs. The offices had PD in the High Street Epsom for 10 flats. Now the client felt that they could probably do a better scheme than the PD. And he was right. I think if you look at the demand, we put it in the books at 2 million, and people really like this. It's a great town, Epsom. It's a good-looking building, and with the added value, it ended up at 2.42, which is 6% with a bit of vacant offices. Clearly, it's a rate per square foot type of buy, but really showing demand. The developers, investors looking at it because they absolutely believe in the underlying value, and developers thinking, well, they could do something better with the scheme. So, you know, there's good demand there.
Was it close to the race course?
It wasn't. Nothing's far from the racecourse in Epsom or the RAC. Will, bit of London. Did you do a few London assets?
Yeah, I had 333 that I was looking after for one client in London. Generally, we did about £10 million worth of sales, ranging from £500,000 up to just shy of 2.5. It's mostly mixed use. Again, classic private investor buys. People raising the question over rents in the capital, but I think the number of buyers and the depth of interest we had would suggest that perhaps there isn't a concern over rents going forwards. I could pick out lot 21 on Highbury Corner near Johnny Wright's humble abode. It was a little cafe maisonette, advertising hoarding on the side, right on the junction there, and that raced up to just shy of £1 million, 970, and actually a tickle below 5%.
Really? That's quite a big number. But again, it's not £1 million. It's London. It's the private investors like a bit,
Exactly.
Of Islington.
And I think we'd all want something like that if we had a spare 970,000. At the other end, Farringdon Road was one we released a little bit earlier.
That did have a lot of flats. There's 4 flats.
4 flats, Papa John's downstairs.
Who weren't paying the rent.
Who hadn't been paying their rent for some time. The flats are in actually very good condition and a cracking location. We had 2 bidders lined up for that on Tuesday, and when we woke up on the morning of the auction day, we had 7.
Yeah. A bit of competition.
Bit of competition, and 2.4 million just ahead of that.
And was that about 5% again? No auction discussion, Ben, is complete without C-stores. We had a couple, a new one and an old one.
We had a couple of convenience stores, yeah, our bread and butter. Just picking out a few of these, we had lot 97 in Shaw. It was a Tesco's actually it was let on a new 15-year lease. The break
was
in
no
10.
work of art, was it?
No work of art. It was one of those sort of concrete things. Yeah, I don't think I saw a window there, but it was town centre. sustainable rent levels, £29,500 per annum. And really, you can see this being a popular one for the consumer as well. So the private investor bought into that.
Recently re-geared, wasn't it? Because we were going to offer it before, but it wasn't signed, I think.
Yeah, so re-geared onto a new 15-year lease for the break at 10. And that's all for around 5% net. So that's great, 5.1%. And then, as well as that, we had one close to my heart, which was lot 118 in Bath. So it's
near the racecourse. Having a racecourse theme here.
Again, this is we build the catalogues around racecourses. The Lansdowne area of Bath, it was within a new build development, and it was a ground floor only slice, so it's leasehold, convenience store, and it was let to a covenant. Well, it wasn't really a covenant actually, but it was a company trading a spa. Yeah. So it was trading a spa, and it was let until 2040 without any breaks. So nice long income. Again,
it's probably one of the longest leases in the auction actually, aside from ground rent, 2040.
Yeah, so basically 20 years without a break. Interestingly, on this one, it did have car parking, but not included in the title. It was a right to car park, and with convenience stores, we normally talk about car park spaces.
And actually, we also say that people are quite averse to buying slices.
Slices, yeah. People tend to prefer whole buildings. That's our normal thinking, but not in this property. It was basically just well located, and it was very attractive. It was a beautiful building. 17 remote bidders were registered for that one. And in the end, it sold for 5.2%. So pretty fierce, actually. On the
not quite 5, but no covenant, and that's quite a decent number.
Yeah, very good result.
I'll match your 20 years, Ben, by taking you to the alternative sector. Again, probably no auction podcast goes past without us discussing something alternative. Lot 75 in Tipton in the West Midlands was a school there, a new 20-year lease, 2.5% per annum compounded reviews on that one. And I think with 11 registered bidders, it just shows private investors' comfort and understanding of these more varied sectors.
It's that sustainability of rent, isn't it?
And that's going to grow quite a lot, that rent.
Yeah, it is.
But it's 20 years. And so people are willing to move out of perhaps the comfort zone that they know of, say, retail or office or industrial, into something a little bit different. But that one, 5.75%, 20-year income. And again, it's no pretty picture. But the underlying values there are not significant, but it's 20-year income.
And it's believable rent, yeah. I mean, one of the things that have sort of struck my mind, I dealt with the Boots portfolio again, that Shore-on-Sea, where Mr. Hodge is going down that part of the world, a bit of a staycation town. This was the standout of the Boots, a little lot, but 11 people bid that up. And again, it's a 7-year unexpired term. It's 5,500 feet overall on it, beating 5% for that. That's quite a long way ahead of expectations. It's also a function of the fact that we talked about re-geared Tesco's, a new rent on a school. The rent was pretty much halved in this re-gear, and the market knows that's what's
re-geared, rebased.
Re-geared, rebased is the word, and then just better than 5%. So a believable asset, and one that was pretty hard fought over. So looking ahead, Ben, what's the market got to look forward to as we enter May?
Lots to look forward to. Last time we had a chat and we met up, it was getting haircuts. Now, we've all had haircuts. We've all been to the pub for our outside pint. In May, delighted to say, we're going to be able to go inside. So 17th of May, hospitality indoor opens.
Yeah. And that's a big moment. And hopefully, all the businesses that can open will. Sadly, we'll lose some, but that's going to give a boost to the sector, the leisure sector.
It is, yeah. And is there anything else to look forward to, George?
Well, I mean,
look forward to is probably the wrong word, but
yeah, the end of the eviction on tenants is the moratorium's ending in June, and that's probably more a moment in time which will bring ahead of the discussions, and then we really will know which businesses are trading and which aren't. Not pleasant subject, but that's the inevitability, and every investor you talk to has had issues with tenants. But hopefully those discussions will be coming to a head by the end of June.
So we should get some clarity on where the land lies now, or very shortly anyway.
It's coming, isn't it?
Absolutely. Yeah.
Good. So thank you very much. That's a bit of a summation. Any ideas that you have you'd like us to discuss? Remember, we sell about 650 assets a year. Podcasts at allsopdo.co.uk is where you'll find us. And thank you very much. I'm George Walker, and say goodbye from Will Clough and Ben Hodge.